very warm welcome to the channel. I started a stock portfolio in 2020, the 30-year plan for 2050, and it's going to be my retirement bonus. If you're building a stock portfolio, stick around for this video. I'm going to show you how I'm doing on my 30-year journey, 4 years in, and you'll see how each of my holdings has performed overall. So let's get started. So when I started, I committed the discipline of at least £300 a month in every month, 2020 to 2050. Eventually, if I follow this and get a good run rate, I'll have £1 million. That is the plan. We start off by looking at the high quality companies in my portfolio to see how they're contributing towards that goal. Bank OZK is the largest. It is 5% of my overall portfolio. You can see that's just tracking below the 100% total return. Williams Sonoma is the next largest position, and last month that was down 22 percentage points, but it's still up about 150%. And I continue to hold that for the long term. Skyworks is also a hold at just 11% total return, but no change in the last month. And Alphabet or Google, it's about 3% of my portfolio. I'd love to make that larger. Had a good month last month, up 14 points with a 72% total return. Visa, I would also like to make a larger position, 12% of the portfolio at the moment, but it's a little bit too expensive. And for all stocks, including high quality ones, I do not want to overpay. That is a key part of my investing approach. Dropbox has pulled back further. It's about 2% of my portfolio, up 8 points. And Rightmove, a new addition to the portfolio, at 2% of the portfolio at £1,000 there. Elevance has been a hold for 4 years, it's up 82% in that period. I'll continue to hold. And Unilever has done very well for me, up over 100% and up 6 points in the previous month. It's done good so far, but American Express has also done well, up 10 points in the last month, so 159% on that. Again, I'll be overpaying if I bought it now, but I wish I had a larger position in this one. It's a very high quality company. Now, Adobe has pulled back quite a bit in recent months, down 9 points last month, up 17% total. I think I'm going to review that one again, just to ensure that the entry point for me is right based on the most recent results. There's a question mark about whether I add further to that position. Now, Meta or Facebook, as many of you know them as, down 15 points in the previous month, but up a third overall in a very short period of time on that one. At Berkshire Hathaway, a bit of a pullback in the last month, down 10 points, but still up well over 100%. We get to those smaller holdings in the quality section, down 7 points on CGI. Fortinet pulled back in the month, but just up slightly on that, up 1% of the portfolio. And Somero is just down very slightly as well. And then InMode had a very poor month there. So that is the higher quality companies with higher returns on capital and margin. We now switch to the dividend part of my portfolio. Unum is the largest. In fact, I believe it's pretty much the largest holding in the portfolio overall, 2,760, down 10 points a month, but still a very good 172% in 4 years. Aviva, very good again in 4 years for that sort of company, up 61% total return, including the dividends. And Legal & General, again, another well-known UK insurer, up about 20%. Investec up 300% in 4 years. Very happy with that performance. And Citigroup has done quite well in the very short time that I have been holding them. Plus 500 has pushed on incredibly well last month, up 23 points. That means it's now a 61% total return again in around about 4 years. British American Tobacco down slightly. That concludes the dividend part of the portfolio. We're now on to managed by others. So if I make bad selections, this helps me to not lose everything. So rule 1, don't lose money. And Terry Smith and his Fundsmith portfolio there, the largest in this managed by others section, up 13% overall. FTSE 100 is up 55% as the second largest holding here. And Linsell Trading, you can see over 100% return on that holding. Now into just index trackers, so descending order of value. US index up 46% total. Continue to hold, but add to that regularly. FTSE 250's nudged up. The Pacific area has remained about stable. S&P 500's dropped a little bit, but still up 36% there. Added to that world index position, that's up 10%. Australia's nudged down slightly. And that takes me to the sort of tactical plays part of the portfolio, the cyclicals. So this will be companies that for a short to medium term, generally in commodities, sort of cyclical type companies that look undervalued and there's an opportunity. Alpha Metallurgical Resources is the largest. Coal at Miner, taking a lot of profits over in the past, but that has remained level in the month, up 718% overall. Intel has pulled back a lot, huge amounts in fact, so that's now down where it was up last month. Bitcoin and Ethereum have pulled back, but still positive total returns, very small parts of the portfolio. And then some very terrible performers here. So AltaSource there down 82%. So what's the next part of the portfolio? This part is the kind of the ones that don't fit the strategy that already had in the portfolio when I implemented my current approach. Got Alibaba in there that's down just over half. Quite a large exposure to that one. Similar with Corsair as well. Cumulus Media has pulled back in month as well, down 73%, and then two investments that are essentially null and void now, Hanant and Voyager. So we show everything here, the successes and the ones that have failed. Shout out to those on Patreon who are paid members. Thank you for supporting, and hope you are getting value from the posts and also the Discord server. To viewers, you are most welcome to join us in this endeavour. So if you're looking to build a stock portfolio, I can't give you personal or financial advice, but we can share ideas and talk in general. Now here's the portfolio overview. Last month it was 51,380. This month it's 51,628. On the face of it, it's gone up, but actually, for full transparency, it isn't actually that it's gone up. The reason it's gone up is because I actually put a very large deposit in, 1,400 last month, much above the 300. Got to the end of March and I run my personal financial budget on an April to March basis. And I did actually come in, as I do every single year, I came in under budget. So a lot of that excess has been saved into this portfolio. That's why the deposit's larger. So you can see the performance on the portfolio was down just over £1,000 for full transparency. That is what, about 2%. So it's within completely normal month-to-month movements. So I'm not at all concerned with that. So the run rate I need, and I do think this is a great calculation, a check you should do on your own portfolios. You have a target, you have a timeline. So in order to get to that point, you should have a run rate calculated. So when you're assessing investments, you have to look at, am I going to get this annualized rate of return from either my existing holdings or indeed future purchases? And for me, I need to get 9.59% a year, assuming that I deposit 300 a month. That feels achievable, but it does require discipline to do that because it's doing that every year from now until 2050 on average. Here's the sort of portfolio overview. Cash is a very, very large position here, 25%, much too large, really, because that's not earning much on a return basis at all. However, I don't have companies that I want to invest in at high quality that I wouldn't be overpaying for. So therefore, I sit on the cash and wait until I find a high quality company that I'm not overpaying for. So I can then buy and hold for the long run. So I want that quality section to be more like 50%, not the 32% that it is today. I've not sold anything in the previous calendar month from the portfolio. I did make some buys, so I added, as I do every month, to my fund Swift position, and I added to the world index, and as we mentioned earlier, Rightmove is a brand new holding. Been watching that company for a while, high quality metrics, high quality company, price was right, or perhaps I should actually say the price wasn't wrong, because I want to make sure I'm not overpaying. I'm not saying it's cheap, but I got to the point where I felt I wasn't overpaying. Therefore, I pulled the trigger. This concludes today's update on the portfolio. I do hope you gained some value from that, some ideas. Obviously not financial advice from me to you here, but hopefully it's given you a bit of a flavour for some good practice in general. Please do comment below if you've got some stock purchase ideas. I'd love to hear them. Otherwise, have a great rest of the day, and I'll see you on the next one.